Hi, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Welcome to Ask Rob and Rob. It's Tuesday. It's another episode of Ask Rob and Rob. And thankfully, we've had another couple of wonderful questions come in. Well, a couple of really good ones to get stuck into this week. So we're going to do that in just a sec. But I'm sure you've got your own wonderful question as well. So how do you send it in?
Well, you can leave us a voicemail by calling this number. It's really simple. Just call up. You'll hear a voicemail message and then you leave your question. That's simple. The number is 013 808 0035, or you can go to our website. Again, very simple, propertyhub.net/ask, and there you'll be prompted to leave a question that way through your computer. So we don't mind which way you do it, as long as you get a good question in, and that's exactly what Louis's done.
Hi, Rob and Rob. It's Louis from London. First and foremost, a huge thank you for all the incredible content you guys have put out. I'm currently in the process of saving for a deposit on my first property as an investment, and your podcasts have been truly invaluable. In a previous episode, you explored the idea of quantitative easing and how in 2020, the Bank of England has introduced £450 billion into the economy through the form of buying government bonds, which the government has distributed through schemes like furloughs and other stimulus checks. I know also the Federal Reserve, Central European Bank and Bank of Japan have introduced a total of $8 trillion into their respective economies through similar schemes. The nature of this QE, through the way governments are spending it and the sheer scale of it, point to a period of heightened inflation for both assets and consumer goods. You recommended, and I've heard from other sources, buying into property and other assets before a period of high inflation. My question is then, if you are looking to buy property and leverage debt before a period of high inflation, are you not running the risk of interest rates on that debt greatly increasing as the government tries to combat that inflation by pulling money back out of the economy through increased interest rates? Cheers. Thank you very much.
Louis, this could be a podcast in itself. And I have great news. We are going to do a podcast. In fact, we're going to double up on our podcasts because this is such an important topic. Everything that you've mentioned there can be the difference between you being wealthy and poor. It will also be what drives the economy over the next few years and also play a big part in its downfall as well. So understanding what's going to happen with inflation and interest rates is critical as a property investor. So on Thursday, we've got part one that you must listen to because, Louis, we've made it for you and for all the other listeners as well, but especially you.
Okay, let's hear our second question now. This one comes in from Dan.
Hi Rob and Rob, my name's Dan, I'm 29 and from the West Midlands. So I've been in property now for about 4 or 5 years. I've got a couple of properties in my own name and I've also set up a limited company where I've got a couple of properties in that now too. So the situation I've got at the moment is a tenant in one of the properties that's currently in my personal name, not the limited company name, has requested to buy the property off me. I've asked if I would be interested in it. I've had it valued, and if I sold the property to them, it would release about 70 to 80k of equity. So my kind of predicament here is, should I sell the property, use the money to buy further property in the limited company, which was always the kind of bigger plan, which is to grow the property business in the limited company, or should I keep the current property and take advantage of the good rental return and extract the equity and then use that equity into the limited company? Thanks for all your help and keep all the good work on the podcast.
Dan, this is a really interesting question. It's a tricky one as well. This is an easy one for me to say because I'm not involved, but I would say put aside the fact that the tenant has offered to buy the property from you, because that might have sparked the little mental conversation you're having with yourself at the moment, but it shouldn't have a bearing on the outcome. Because if you assume that your property is a typical type of property and it is in most places in the country, then right now you'd be able to find a buyer for it anyway. The fact that you've got a buyer already living there makes things a bit more convenient, but you wouldn't expect with the market where it is at the moment for you to be waiting around too long if you were trying to find a buyer in the open market. And if you did that, maybe you'd even end up achieving more because you'd get a bidding war going on. You could get lucky. So I'd put that aside and just think, is this a property that you would have been looking to sell otherwise had that offer not come along? And this is where doing an annual portfolio review is useful. It's something that we've talked about repeatedly in the past, going through looking at things like your rents, your mortgages, how your portfolio is performing, and thinking like, which properties are performing for me? Which ones am I happy with, do I want to keep hold of? And which ones either aren't performing, and I'd be quite happy to get rid of them, and everyone's got one or two of those when you get a portfolio to a certain size, or which ones do I believe have done their job, and I think I've had the best out of them, now I'd move them on if the chance arose. By going through that exercise, when something like this comes along, you can go, was that property on my list or was it not? And if not, if it's a property that you wanted to hold on to, then having an offer for that property, assuming that offer is at the level you thought it would be, shouldn't change anything. So I'm aware that real life is not like that. And of course, other factors will come into it, including convenience, having an easy sale, and including wanting to help out the person who's living there and give them what they want. I understand all that, but it's easy for me to be a bit Spock-like about it because I'm not involved. But that's what I'd be thinking about, Dan. And the positive that's already come out of this is it seems like it's motivated you to get the property valued, realise that there's some equity in there. So if you do decide not to sell, then that is equity that you could potentially tap into by remortgaging, which you could then use to go out and continue your property journey, perhaps within a limited company. So I hope there's something useful for you to think about in there, and good luck with your decision.
Good luck indeed. So thank you, Dan. Thank you, Louis. And thank you for listening. You're going to be rewarded with a great episode on Thursday, so make sure you listen to that. And of course, we'll be back with Ask Rob and Rob next Tuesday. So until then, take care. Have fun. Bye-bye.
Bye-bye.